Eric Muathe, Muathe.com, with world market analysis for the weekend of April 29th and April 30th, 2017. Let's take a look at world markets here. Now, I didn't think I was going to have time to do this video, but let's get ahead with it here. Let's try and see what we can get. Since we are beginning a new month, we have to go back and take a look at the monthly charts in case the month-to-month energies change as we begin a new month of trading as of Monday. So let's go here, begin with Australian market. We can see that even after 1 month, we are still back at potential resistance based on this top side line on the monthly. And there's also a line from the previous break of the highs of 2015. So we broke below here of the highs, and we are coming back to test the red line. So until we can move above the red line and the blue line and the red line and the black line, we've been saying that this market should be at the very best sideways. And here we can see that we are back to that level. Failure to move above those two lines, especially if we see resistance in the new month, that would suggest that the next major trend is down as far as the Australian market is concerned. And this theme of markets showing potential monthly resistance is pretty much across the board on most markets. And here we can see, as far as China is concerned, the break here of the highs of late 15, early 16. So this movement here is being tested, has been tested in the last couple of months. The market seems to have formed a double top on that line. So we can see resistance here. And again, this chart shows that as long as we are unable to move above that line on the monthly, chances are we are looking at a market that could easily slide and see lower prices as far as China is concerned. If we take a look at the Hong Kong market, just like the other markets we've seen so far in the video, we can see that it's coming back to test a recent break. So we had a break here in 2015 of the highs here, and so pretty much we are coming back to test that level. I call this method the uniformity method. Now, should we see resistance here in the new month, that would suggest that now we are due for a major pullback. Also, there's a line connecting RSI highs going back to the highs of late 07, the highs of 2015 is a line somewhere here. Until we can move above these two lines, here's another market showing that there's potential for resistance month to month. Keep in mind, off the lows of early 2016, we've had a nice move. So a pullback around here would only make sense, especially if the RSI shows rejection at these two lines. If we take a look at the Kospi, and again, all data monthly, we can see that it's coming back to test this recent monthly closing high, all-time monthly closing high from 2011. The level to watch there for a potential price breakout is 2196.32. So as long as it is holding above this number here, where it closed above this past month, so there's a monthly breakout. If we can stay above that price, that's good. Failure to hold above that price, in other words, a failed monthly breakout, would be a sign that this market is running out of momentum. Also, we can see that we are coming back to test the break line here. This break line was what gave us the highs of 2011, as you can see here. And so pretty much what the RSI is doing is coming back to test that level. So month to month, this could also be an area of rejection. If we are rejected here month to month, then definitely we can expect that the next trend is lower. If we back test this same line of resistance, you can see it coincides nicely with the other major break. That break was what brought the market off the highs of late 2007. So this is a critical level. Rejection here would suggest that the next major trend is down. And of course, bulls would like the market to move above this red line and would like the price to stay above the previous all-time monthly closing high at 2196.32. Failure for price and RSI to hold above resistance levels would suggest again that the next major trend is down. If we take a look at the Singapore market, we can see that there's RSI topside resistance coming in play. In fact, we closed exactly on this line. Failure to move above this line might suggest that this is where we stall. Also, we are coming back to test the line that was the break here of the highs of 2015. So the RSI is coming back to test this line. So we can see that the theme across the globe is that most markets are coming back to areas of potential resistance. If we are unable to move above these resistance levels, chances are what this is suggesting is that the next major trend for most markets might actually be down once confirmation of RSI resistance takes place month to month. This is also true for the Nifty. We can see that it is also coming back to test the break level of the highs of 2015, and we're still within the range of resistance right there. So month to month, if we are able to stay above that red line, then the market might have a chance of recording higher prices. If we show resistance on that red line, then this is where we can expect the beginning of a pullback month to month. Keep in mind, I've been saying that this line can also be back tested, and it gives you some of the major break points in the market for major bear markets. A break here led to the bear market of 2000, 2001, 2003. A break here led to the bear market of 2008. So clearly, rejection here month to month might suggest that the next major direction is down. Keep in mind, the backdrop is we've come from the lows of 2016 to the current highs. That's a nice move, and potentially resistance here might suggest that a reversal of some magnitude is what would make sense. If we take a look at the Japanese market, you can see that the Nikkei is coming back to also test the recent break, or you can even draw it this way. It's a back test of the previous break line of the highs of late 2015. We are coming back to test this as one way of looking at it. The other way is to consider where it broke down recently and just draw a line from there. So we can see failure to move above this line is what we've been watching here for potential resistance. And again, this is also the same level where we've been seeing problems in the market. We can see rejection here for the highs of early 2000, and a break of this trend line here of the highs of late 2007 gave us some major highs. We had this movement above the red line for this entry in 2013 for a nice multi-year rally, and it's only until we broke back below this line here that we finally started pulling back for a major pullback here. So resistance exactly where we close at the end of April is where we can expect, if we are unable to clear that resistance, confirmation of resistance here suggests that now we are due for some type of a multi-month movement to the downside. If we take a look at the German market, pretty much the same type of analysis. This seems to be very consistent in all the markets that I've been looking at this weekend. You can see that this was the break line that brought the German market off the highs of 2015. So we draw a line connecting that level, and we are back to that level. So this is within resistance level. The more we stay above the red line, the more the market has a chance of adding on to the gains. Rejection on this red line would only make sense based on other charts we've looked at. And again, even here we can see that this coincides with all the other bear market sell signal levels. Rejection here, this double top gave us the highs there. A break below the red line gave us the movement of the highs of late 2007, and again a break here gave us the movement of the highs of 2000 for all these major bear market trends. So rejection here month to month is where you'd expect this to turn and trend lower. Take a look at the French market, and also still coming back within range of resistance. As you can see, this is where we broke down in 2015, and we're pretty much coming back to test that level. So month to month, bulls would want the market to clear that red line. Failure to do so might suggest that again, another market showing potential for major month-to-month reversal and the beginning of a major slide, if not the beginning of an outright bear market. And of course, there's another line connecting RSI topside like that. So let me draw that on a clear chart. There's another line that is coming in play. We ended the month back to test this topside resistance line, and clearly you can see that if this is confirmed as resistance, then we can expect markets to trend lower. If the market can clear this topside RSI resistance, then we have a chance of adding on to the current gains. So either resistance here and a movement lower, or a breakout of this obvious resistance line, and we can expect higher prices. If we take a look at the London market, we can see also topside RSI resistance already taking place. The market is responding to this resistance line and also coming back to test this line here, which has gave us major break points and for major bear markets. We broke down here off the highs of late 2007, resistance here of this high there, and now we are coming to stall. So failure to move above those two lines month to month still points to a market that is due for a correction. Keep in mind again, we've really moved from 5,500 to the highs here of about 7,400. That's a nice move in about 13 months, more or less. So resistance here, as confirmed by the RSI, might suggest that the next major trend is going to be down. If we take a look at the Swiss market, we can see here that, let's go back and test this break point, this RSI break off the highs of 2007 before we get this massive plunge, and draw a line from there. And again, check the description for this method that I call the uniformity method. We can see that red line was a problem with a double top rejection here in 2011, and we get this pullback. We finally moved above the red line somewhere here for this entry. We go into a nice bull market run until the end of that movement here, and now we are coming back to test that line. So failure to move above this red line and to stay above it might suggest one can expect a pullback here, and then there is a backtest line that is coming in play. So we broke down here off the highs, and now we are coming back to test the underside of this line. Failure to move above this line is also going to suggest that now we are due for a reversal. If we take a look at the Canadian market, it has a similar backtest line that seems to be playing out. In other words, we broke below that level here, which is off the highs of 2015. We are coming back. We've been trying to stay above that line. We seem to be struggling to hold above that. So if this is eventually confirmed as resistance, then clearly we should expect a major reversal, given that we've had a nice run off the lows of 2016 to the current highs. That's a nice recovery. And also don't forget, as far as the price is concerned, Canadian market has been attempting to break out on the monthly chart. Month to month, there have been almost 4 or 5 months of an attempt to close above the all-time monthly closing high, and this is at 15,625.73, which is this monthly closing high in 2015. The market has tried over the last couple of months here and failed. So as long as we are finding it difficult to hold above this price, we can assume that failure to break out suggests that the market is running out of momentum, and we can expect a pullback. And if the market can actually successfully eventually move above this price, then the market has figured out a way to gain momentum and clear that resistance. the way we ended the month of April, we failed to close above this price, so I would lean to resistance until we can see a definitive clearance of this breakout price. So after many months of trying to break out, not successfully able to close above this price, I say the market gets tired, because failed breakouts are notorious for taking trading instruments lower. Let's take a look at the Chilean market, which was actually doing well, but as I suspected at the end of last month, that it was coming back to test the break of the highs of 2011, and you can see that it's exactly where it seems to be stalling. So month to month, as long as we are seeing rejection here in the RSI, one can speculate that even here the next major trend is down. If we take a look at the Brazilian market, we can see that it already gave us a reversal signal many months ago, or let's call it about 2 months ago, when it hit this level here with double top. So the Brazilian market already is showing resistance. Unless it can clear and move above that line, one can assume that without a breakout here, that this one is still giving us a sell signal based on this double top rejection on the RSI, and that rejection comes from the previous break of this trend line here, which corresponds with the movement of the highs of 2010. It became resistance here again of the highs of late 2010. So unless we can move above this black line here, chances are this market is also due for a major correction. If we take a look at the NYC Composite, we can see that it also ended the month of April back to potential resistance. This was the break of the RSI of the highs here, and you can see that it's coming back to test that level. So confirmation of resistance on that line might just suggest that even here we are due for a pullback. Now keep in mind, if we see rejection on this line month to month, then clearly what the market would also be doing is forming divergence. We see an improvement month to month in prices. Failure to move above this line would suggest negative divergence. That negative divergence could also be the beginning of a pullback, if not the beginning of a major bear market move. If we take a look at the FTSE All World Index, so All World Market Index, we can see that the world markets are pretty much coming back to test this line here, which was the break level of the highs here. So we are coming back to test this line. Resistance on this line month to month might suggest that we are due for a pullback. And also we can see that there's a line connecting the top side of the monthly RSI. So you can see if we are unable to move above these two lines for the FTSE All World Index, chances are world markets pretty much for the most part are due for a major reversal lower. We can also take a look at the MSCI World ex-USA Index, and even here too we see the same conclusion, that pretty much we are coming back to test top side RSI resistance, and also we are coming back to test what has been a problem area since the break of this trend line. Once we broke down below that trend line, so once we broke down below this line here, we see that world markets as a whole dropped, especially emerging markets, and we can also draw a line connecting that level right there. So failure for world markets as a group to move above this line suggests that most world markets are due for some type of resistance, maybe due for the beginning of a major bear market. So month to month, those are the things to consider as far as I'm concerned. Looks like for the most part it would only make sense if market starts pulling back from current levels, unless they can clear the current resistance, which are well defined and discussed in this video. As always, good luck, enjoy the rest of your weekend. Eric Muathe with Muathe.com. Peace and blessings. I am out.